He was one of only a handful of Wall Streeters to ever make it to court. And it took a jury only 2 days to decide Fabrice Touré, better known as Fabulous Fab, had in fact misled clients by selling them doomed financial products loaded with bad mortgages. The failure of those mortgage-backed securities was seen as the catalyst for the financial crisis.
You can really have one of two responses to this. You can call this a major win for the SEC, a big win in court for one of the most high-profile trials to come out of the financial crisis, or you can look at it as they got this measly verdict against a mid-level banker who really wasn't one of the big guys responsible for what went wrong back in 2008.
Touré's employer at the time, banking giant Goldman Sachs. It was also charged with fraud, but settled with American regulators back in 2010, paying what was then a record fine of $550 million, but without ever admitting or denying any wrongdoing. Since then, Goldman Sachs has been able to distance itself from the financial crisis, but Thursday's verdict now recasts a shadow on the bank's reputation by reopening an old wound. So what happens now to the Fabulous Fab? He faces potential fines and even a possible banning from the financial industry, the same industry whose reputation continues to be stained by the sins of its past. Samira Hussain, BBC News, New York.